Hey guys, Alex here. Welcome back to my channel. Before we begin today's vlog, I have a small request. 80% of the viewers of this channel are not subscribers. If you're not a subscriber yet, please do me a favor and hit that subscribe button. It helps this channel out tremendously because the bigger the channel gets, the more I'm able to reach more people, the more I'm able to help more people. Okay, so back to the video. In today's vlog, I will be talking about the entire bank financing process, how it works, why sellers should consider bank financing. But before that, let me give you an overview of the types of financing. There are 5 main types of financing for real estate. We have cash, bank financing or pag-ibig financing, deferred cash, in-house financing, and rent-to-own. The first 3 types of financing terms, cash, deferred cash, and bank financing, are usually offered by developers. If it's a socialized or economic housing project, then pag-ibig financing is also offered. But for open market listings, meaning listings above 4 million, bank financing is the more common type of home loan compared to pag-ibig financing, as pag-ibig usually requires the project to be 80% done for them to process the bank accreditation. Some developers also offer in-house financing, but most do not. So rent-to-own is also more common in more metro cities like Manila and Cebu. It is not as common in CDO or Davao. When it comes to brokerage, there are 2 types of financing available to buyers. We have cash and bank or pag-ibig financing. Deferred cash can also be an option depending on the seller, but usually sellers give a shorter term such as 3 to 6 months compared to developers who give a longer term for deferred cash between 12 months or even up to 50 months. Cash is a pretty straightforward type of payment, and it's also the preferred mode of payment of many sellers because they can be fully paid immediately during closing. For this video, I'll be discussing about bank financing and why sellers should also consider this mode of payment. Bank financing is the process when banks or financial institutions lend money to clients in order to purchase a real estate property. So the first step is home loan application. You will need, as the borrower, to comply with certain bank requirements such as 2 valid IDs, marriage contract, proof of income, filled up home loan form, and appraisal fee. So appraisal fee varies between 5 to 10,000 per property depending on the bank. And we also have unit computation for developer-owned units and collateral documents such as the title and tax declaration for private listings. I have an infographic on the bank financing requirements, and I can also send you an email if you would like a copy for easy reference. Once all requirements are submitted, the bank will schedule an appraisal of the property within the week. An appraiser from that bank will visit the property to appraise it. Once appraised, the bank will now process the home loan approval. This usually takes 15 banking days from submission of complete requirements, although with some banks, it might take longer. The second step is the release of the letter of guarantee plus closing. So once approved, the bank will release a legal document called the letter of guarantee or LOG addressed to the seller. So sellers, this is your guarantee that the loan will be credited to your account or given to you via manager's check as soon as the transfer title is submitted to the bank. The address of the property, the loan amount, as well as the buyer and seller's name will be indicated in the letter of guarantee. The buyer and the seller and the bank officer will need to sign this document, and all parties will be getting a copy. Once the LOG is out, we can now proceed to closing. So the buyer will then need to pay a down payment. So there will be a down payment since the bank will not loan the buyer the entire amount. Rather, they will let you loan 70 to 80% of the appraised value. So you will need to shell out around 20 to 30% of the total contract price for down payment, plus around 10% of the total contract price for tax payment. So a safe estimate of buyers for the down payment would be around 30 to 40% of the total contract price. This already includes the tax payment. Now, during closing, both parties will be signing 2 documents. First is the contract to sell, and second is the deed of absolute sale. The buyer gives the seller the down payment. The seller turns over the original title to the buyer for transfer to the buyer's name. Now, this is where sellers get concerned. They usually ask me, why should I give the title to the buyer when I am not yet fully paid? So let's discuss that more in the third step. The third step is loan release, meaning the seller will now be fully paid by the bank. This is a bank policy when it comes to home loans, that the title has to be transferred to the borrower's name, meaning the buyer's name, before the loan is released to the seller. So once the transfer title and tax declaration is submitted to the bank, then the loan proceeds will get credited directly to the seller's account or given to them in the form of a manager's check. Now question, what will be my security that I will be fully paid by the bank? Your security is the letter of guarantee from the bank. This is why you should also wait for the LOG to be released before signing the deed of absolute sale. Another way to have more control over the transfer process is to take care of the title transfer yourself as the seller. So I have a processor that I can recommend who can do the title transfer, and this way you will really be able to follow up and ask for the processor to do the transfer in the fastest time possible. By hiring the processor to do the title transfer, you as the seller will have more control over the process. The faster the title gets transferred to the buyer's name, the faster the loan will be released to the seller. What might cause delays on the loan release? Since the release is contingent on the title getting transferred to the buyer's name, if the title transfer process gets delayed, then loan release will also get delayed. So you can mitigate this by hiring a good processor to transfer the title in the fastest time possible. Another thing that can cause a slight delay is when the buyer has a special interest rate that he or she wants the bank to approve before a loan release. Since the policy of the bank is to follow whatever is the prevailing interest rate is during loan release. So since interest rates are always fluctuating, the buyer will usually request for the lowest rate that the bank can give. This usually takes around 1 to 3 days to be approved. However, let's give it up to 1 week allowance, since sometimes it can stretch up to a week if the rate requested by the buyer gets rejected by the bank and then they have to make another request. I had a transaction I was processing which got finished last December. The title got released in the first week of December. After release, the tax debt transfer was then processed, and then the processor will then request for certified true copies of the transfer title and the tax declaration, since you will also need to submit the certified true copies as well as the original documents at the bank. Since the buyer at the time wanted a lower interest rate, then the bank had to process it for approval. This took an additional week since it kept on getting rejected before it got approved. So once approved, the manager's check was then released to the seller. Now, why should sellers consider bank financing? Of course, we want to get only cash buyers if we can. The advantage of cash buyers is there's no longer any waiting time, and you as the seller will be fully paid upon closing. However, considering only cash buyers will greatly limit your pool of potential buyers, because the reality is only a handful of buyers have the capacity to pay in cash. But there are a lot of qualified and serious buyers who are eligible for financing. Considering financing as a payment option will greatly increase your pool of potential buyers, which can lead to your property getting sold faster. Think of it this way. Let's say you already have a buyer who wants to buy your property through financing. You will only need to wait 2 to 3 months for the title transfer and full payment. If you decline the buyer who wants to buy through financing and wait for a cash-only buyer, you will not know exactly when that cash buyer will appear, right? You can end up waiting for 6 months or even years. Unless, of course, your property is a highly desirable property and priced way below market value, then it will sell fast. So to summarize, bank financing is a safe and completely legitimate way of acquiring property. In fact, it is the most commonly used method of financing that buyers use to buy property. There can be delays, however, to loan release, but this can be mitigated by hiring a good and trusted processor to do the title transfer for you. There's also someone I can refer to in case you don't have one yet. This way, you will have more control over the process. And the main advantage of bank financing is that it greatly widens your pool of potential buyers, which can lead to your property getting sold faster. And that's it for today's vlog. If you have any question on the process or have a property that you would like me to list, then send me an email so I can get in touch with you. My contact info is in the description box below. And if you would like to be updated of the newest pre-selling projects in Vismin and other real estate how-tos, then send me an email so I can add you to my mailing list.